Hello everybody and welcome to Invest for Excel video tutorial. Today we will create and analyze the profitability of a hotel construction project. Let's assume that we are planning to build a 4-star hotel with 50 rooms and we would like to understand how profitable this project would be. We will use Invest for Excel software, which allows making the professional analysis quickly and effortlessly. This is the main screen of Invest for Excel. It resides inside of familiar Microsoft Excel spreadsheets, and you can easily use all your favorite functions when you need it. But let's switch back to Invest menu to start our financial modeling. Let's create a new calculation file for asset investment and save it with a descriptive name. On our first step, we need to provide the basic values of our investment project. Let's begin with naming our project and defining the calculation term. Now let's select a detailed periodization. The calculation term will be split into two calculation phases. Construction phase, which is 1 year, will be created on a semi-annual basis. And operation phase, which is 5 years, will be created on a yearly basis. Since it is a real estate project, let's calculate the residual value as perpetuity and press OK. Now let's fill the rest of the information, such as numbering, units, and currency. Let's say that we expect a certain rate of return of 8% and our income tax rate is 20%. We can also provide some contact information and project details. That was our first step. By pressing buttons with index fingers, we can jump to the next step or come back to the previous one. The program brought us to the investment table, where we need to define all our capital expenditures according to their payment schedule. Let's take a look at the structure of our calculation file. We have two calculation phases: construction phase, which is 1 year, and the operation phase, which is 5 years, created on annual basis. By default, we have 10 investment rows, however we can expand this table up to 30 investment rows, each having its own depreciation settings. In our case, we have only 5 investments. Let's hide the rows which we are not going to use. Now let's define our first investment item, building and structures. We pay 1 million euros straight away in January 2020, another million in 2020, and 500,000 at the end of our construction phase. Now we need to define the depreciation for this investment account. Here we can define depreciation method, time frame, and when to begin our depreciation. Also, we can define where this particular item will be allocated in our balance sheet. In our case, it is building and structures. We enter the rest of the investment items the same way, bearing in mind that they may have different depreciation and balance sheet category. Now let's move to the next step, income statement. Here we describe our expected incomes and costs. Let's see how it works. In our case, we have only one source of income, rooms revenue. Let's open up 3 sub-rows to calculate it. To calculate our revenue, we need to multiply number of rooms, rate per day, and room occupancy in days. The multiplication operator can be found on the left. Now let's enter the number of rooms for the first operation period and press copy and distribute function to distribute this value throughout the whole calculation. Let's repeat this action with the rate, this time taking into account the annual growth of 2%. And with occupancy. Now our expected income has been calculated. Let's start defining our operating costs, consisting of staff costs and other fixed costs. Let's enter them and distribute these values with 2% annual growth. We are modeling a very simple case and there are rows that we didn't use. Let's hide them by pressing Select Empty Rows button. Now our income statement looks much cleaner. We defined our income and costs, and Invest for Excel has already calculated all important ratios, such as EBITDA and net income. Let's proceed to the next step. It's time to see how much money is tied up in working capital. We can choose either to enter the average cash flow delay in days per period or enter the estimated average values in the adjusted balance rows. Let's use the first option. We expect to receive the payments from our hotel customers on average with 7 days delay. And let's say that our average term of payment for our current liabilities is 30 days. As you can see, Invest for Excel has automatically calculated the amount of working capital required for our project. Finally, Invest for Excel offers us to look at the automatically generated cash flow statement and balance sheet. Cash flow statement gives a valuable overview of the project we simulate. For instance, one of the most important items in this report is free cash flow, because the profitability indicators are calculated based on this row. Another important item is cumulative total cash flow. By monitoring this item, we can see whether our project requires extra financing or not. Financing file can be created in Invest for Excel, and the cash flows of the financing can be replicated here. The second report is balance sheet. Here we don't have to enter any data. This report is created automatically and we can use it for our own analysis. Key financials table is made for your own ratios or parameters that you want to analyze. Data entered here will be automatically included in the sensitivity analysis. Let's make a quick overview of what we have already done. We entered basic values, defined our capital expenditures, modeled our expected income and costs. We have calculated the required amount of working capital and went through our cash flow statement and balance sheet. Now it's time to look at our results. By pressing the next button, Invest for Excel is bringing us to the results screen. This table gives us a total overview of our project profitability. Here we can find the initial data. We can also modify how the residual value is calculated. We can define an extrapolation period, in our case perpetual, and with an annual growth of 2%. Now let's hide the residual value menu and take a look at the profitability indicators, which are important for the decision making, such as net present value, internal rate of return, return on net assets, economic value added, and others. The result table only shows us how the project looks like with the initially specified numbers, and we may still need to adjust them to achieve the result that we want. One of the great ways to do it is to perform the break-even analysis. For example, let's try to find out the break-even value for the room's rate per stay. Let's use the ribbon menu to jump over to the income statement. Select the cell where our rate is specified and press the break-even button. With just a few seconds, our break-even rate is found. Now, if we switch back to the results screen, we can see that net present value is 0, which means that our project will start to pay itself off at this price level, and we can use it as a guideline to adjust the pricing. When analysis is done, it is possible to press the undo break-even function to get our values back the way they were. For more insightful analysis of our financial model, Invest for Excel offers us to look at the sensitivity analysis. There are 11 pre-built tables with charts which reflect the impact of chosen variable on the overall profitability. Let's take a look at the first table. Here, on the left side, you can see the variable, the discount factor. Second row represents the positive and negative change of the original variable, and third row shows us how this change affects the chosen profitability indicator. By clicking this button, we can choose the profitability indicator we are interested in. For example, let's take a look at discounted value added. Below you can see the impact of this variable on the other annual key financials, such as EBIT, return on net assets, and others. In similar way, you can assess how changes in total investment, income, variable or fixed costs affect the profitability. In addition to that, we have 6 extra pre-built tables where you can choose any calculation row as a variable for the sensitivity analysis. Just a few clicks allow you to create a chart. You can create it manually, or you can use the ready-made chart function. Now it's a good moment to save our project. Often we need to compare several scenarios of the same project. It is easy to do it in Invest for Excel. We can use Save As option and save this calculation with another name. After that, we can edit our second scenario file according to our needs. We can add extra investment, change the number of rooms, and change our operating costs. Now we can use the comparison table to see which scenario is the most favorable. Let's create a new comparison table. The comparison table has 6 slots, allowing us to compare up to 6 investment projects side by side in key figures and visually. Let's press on the first slot button to load the data from our first hotel construction project. and on the second slot button to load the data from the second modified scenario. Now we can compare the value of all investments, net present value, internal rate of return, return on net assets, and other metrics. We can hide unused slots by pressing Hide Empty button. To compare project visually, we can take a look at the net present value, internal rate of return, and payback time sheets. Now our comparison table can be printed and brought to the decision-making meeting. I hope this video tutorial was useful for you. You can download the test version of Invest for Excel software to see how investment appraisal, financial modeling, and business valuation can be done easier and faster.